Hey everyone, it's Siam Kid, the realistic trader here, and I want to take you through a presentation which is normally a 2-hour long thing, but I'm going to condense it down to no longer than 30 minutes, hopefully. Well, that's the plan. I tend to ramp it on, so let's crack on. And the three things I want to teach you or share with you is the typical trading journey, the who, why, where, what and how, and if trading is actually a suitable activity for you. So I would easily say 90% of the population are not suited for trading, even though some people think they are when they really aren't, and vice versa. So I want to make a pledge to you before we go on. You can put your credit cards away. You just don't need to worry about any crazy hard selling. There's no false deadlines or false scarcity, and no silly marketing discounts. None of that bollocks. Chill out, put your credit cards away or whatever, grab a coffee and sit back. So first of all, the typical trading journey. It's very similar to the theory biz journey. So when you're setting up a new business, you have the infrastructure set up bit where you're setting up the website, the products, all that sort of stuff. Then you launch, woohoo, and then you enter the daily grind. Now for most people, they never leave the daily grind, and that's why most business owners tend to get stuck. They've effectively bought themselves their own job and work twice the hours for less pay. But some people do well. They then start making some profits, they then scale the business or the model that they have, and then they may exit or pass it on or whatever. So that's the business journey. And the thing is, it's not all about the sex. So when it comes to trading, people always think about the sex, i.e. the setup, the entry, the exit. And it's completely, you'll see that the sex bit is a very small part of the whole trading journey. So before you even place a trade, you need to know your why. Why the hell are you trading? And it needs to be more than just money. What are your trading goals? So is this going to be a cash flowing activity or a capital appreciating one, or is this your future pension? There are many different things you can do when you know how to trade. You need to know the 5 M's of realistic trading, which we'll go through later. The daily habits, disciplines that are set up before you even place trades, and what you do on a habitual basis. The risk procedures. Everyone focuses on the profit, but you need to look at risk first, and profit is a good byproduct of good risk management. You need your logging software, because it's just like running a business. You would not run a business without an accounting software, and it's the same for trading. Those who do not log never profit, and that is almost a fact. I don't know of any profitable trader out there that does not log. You need to know your stats, and you only get your stats from logging. Your stats is the only magic bullet holy grail of trading. They are the only things that will help you progress throughout time. And then you need your celebration milestones. So it can be a very lonely activity, so you need some little mini celebrations. So then once you've got all that, you then need to set up a dummy trading account. So that's where you set up a fake trading account with fake money, but you can then trade with the real live markets in real time. So that way you can hone your skills, strategies and whatnot in a completely risk-free environment. I'm still not sure why a lot of people knock demo trading. I mean, yes, it's not the same as risking your own money, but it's pointless risking real live cash when you don't know what you're doing. So you do need to demo trade until you're consistent. And then you enter Sedge-Medge, which is basically the daily grind. And this is what I call, Sedge-Medge is your setup, entry, journal, monitor, exit, journal. Okay, so you need to set up, so you're looking for a setup. Great, you found it. You then need to enter the trade or the market, and then you need to journal. I journal that trade. You need to log it in, and then you need to monitor the trade. Then you'll eventually exit, whether it happens automatically or you pull it, and then you need to journal again. Sedge-Medge, that is trading. That is 90% of trading. And then hopefully you get a consistent ROI. Then you can scale the account through a bunch of different means. and then eventually you'll hit your goals. So that, again, this is the theory trading journey. Unfortunately, most people skip nearly all of that. They focus on the sex and they lose. So yeah, it's not all about the sex. Right. Don't be one of these people. Honestly, the whole of the internet and Facebook and Twitter is full of these people going, oh, I'm hunting for, that magic holy grail trading system. It doesn't freaking exist. So you need to get over that. It just does not exist. So here's a true story. I spent 24 months strategy hopping. So I was literally this guy searching for, a really good trading strategy. And yeah, I bought every single, black box tool you could find out there on the internet. I bought all sorts of strategies for £500 or £2,000 or whatever. They just don't work. They never worked. And I've been trading for over 15 years now, and I still just don't do that. And the reason being is that the real success in trading, the variable of success is in is maths based. So you need a positively skewed system, so it has positive expectancy. Don't worry, we'll learn about that later. And then you just need to deploy it consistently. Whereas most people out there, they'll jump on a strategy, they'll do it for a month. Oh no, I lost money, and then they'll just jump onto another one, and that was me. I lost a lot of money doing that. And at the same time, I guess in parallel, I was also teaching myself, which was a bad idea. I've never done a trading course by anyone else. I was literally just Googling as much as I could. In fact, when I really first started trading, Google wasn't really around. It was mainly Alta Vista. But yeah, I was teaching myself, and that is why I spent the first 4 years losing heavily. And then I was break even by year 5 or year 6, and so basically 6 years of just frustration because I taught myself. And the thing is, you have to understand that every single free trading resource you see on Google will not work. In fact, they are there to screw you over, because imagine the banks, imagine what they would do if they wanted to screw over the public on the markets. Well, it's pretty simple. They would go, right, what does the average punter do? Well, the average punter goes on Google and looks at some free trading strategies or patterns or candlestick patterns, etc. And they go, oh, okay, so that's what they're looking for. Well, how about we move the market so it creates these fake patterns, and then everyone will go, buy into a certain market, and then we'll just dump the market, and vice versa. So literally anything free out there, I would be very wary. I mean, hell, be wary of this friggin' video. Like, one of the things you need to do is have a critical mindset and investigate everything. So yeah, please treat this video in the same light. So, and true story. Once upon a time, or in fact many times, a lucky winning streak lulled me into becoming a wounded crab. And this is the term for what most traders, so anyone that's been trading for over 2 years or so, I promise you they're mainly a wounded crab. They've been hammered, they're now scared, and they don't know what to do. So this is basically what happens. So you enter the market, and then let's get my pen out and I'll show you what tends to happen. So okay, let's get a pen. Is it red? Yeah. So what will probably happen if you're a newbie, you'll find something, or you teach yourself a system, and then you may end up making some profits to begin with, because it will just be a lucky streak. Pretty much everyone has a lucky streak, and then all of a sudden everything goes wrong and you lose a fortune. Now this is where people go bye at that point there, and they go, right, trading doesn't work, it's stupid, it's a scam, blah blah blah, and they never return. But then those that do stay on, they enter the wounded crab bit, and then they end up just doing something like this. It is probably normally a downwards trajectory, but they're so scared of losing that they don't risk. They reduce their position sizes, they either trade less or whatever, but yeah, they never win anything, they never really lose anything, and they're bleeding by 1,000 cuts. and then all you need to do to get good, you need to just have sort of a mindset reset, and then you need to do things properly. But the thing is, the greed phase can take anywhere from, I would say, 1 to, God, it could be anything, but yeah, let's just say 1 to 365 days. But mainly, I would say it's probably 1 to 90 days, which is the real thing, or the danger time, because there's a stat called the 90 rule, and that's basically where 90% of people lose 90% of their capital in the first 90 days, and that's a pretty accurate rule of thumb. But then the fear phase can last anything from 1 to 5 years. I've seen a lot of people in the fear phase, and they never end up going anywhere. And so then, you need to do things properly in the reset phase. So that is basically the theory trading journey. There's a lot to take in. I know I'm skimming through everything. This actually hurts me because this is, as I said, this is a 2-hour presentation, trying to condense it into 20 to 30 minutes. So but hopefully you get the gist, and that all the green stuff that you can see here is the really important stuff. So that's a typical trading journey. Now let's have a look at the W's, the who, why, what, where, and also the how. So first of all, who, my name is Siam. I'm literally just a Norwich boy, born and bred. I joined the Air Force as a pilot when I was 18, straight out of school, did officers training, etc. And at the same time, I was trying to juggle 2 things. I was trying to learn how to fly planes and also helicopters, and I was also trying to trade very poorly. I then quit the Air Force to become a full-time trader. That went terribly wrong. I lost everything. I was an idiot. And then I was like, shit, I had no money to trade, and so I then got into business to try and get better, to basically get a proper income stream going. And then I basically through necessity became a business owner. Business screwed me over for the first 4 years. Again, anything I do, I'm a bit of a slow learner, I guess. It took me a long time, many years to get good at trading, and it took me many years to get good at business. But then so now fast forward 10 years or so of business experience, I guess, and I'm now an angel investor. I'm a full-time investor, so I invest in and also buy businesses, and I also siphon the profits. So basically all the, where's my pen here? So any of my profits from business and also my investing, oh god, I can't draw. I then go back into my trading account, if that makes sense. So that's me in a nutshell. So in terms of track record, bought and sold a bunch of businesses, and I guess I treat business like trading. So trading is not about your hit rate, it's about your net positive outcome. And so with trading, like most of the time, I guess I would average a 30 to 35% hit rate with my trades. So I lose more trades than I win, but when I win big. So and in terms of trading and investing, since 2010 I've called many different things. 2015 was a good year when the Swiss franc unpegged from the euro. That was a great 30% day. When Black Monday, 24th of August, 25th of August, that was another 30% day. So and it was and since then it's been great. And on Black Monday I took a £1.4 million trading account up to 1.8 million in a single day. So that was a good day. I made 426 grand in, I guess, half an hour, maybe an hour. But it was surreal. I was sat in my underwear at home, and it was just it was a surreal day. Now I'm not trying to blow my trumpet up my arse. No, that's not the right saying. I'm not trying to blow smoke at my own arse or whatever. But I just want to. I guess the point I'm trying to make is that things are all peachy now, but it wasn't always hunky dory. And I mean, there was a 6-month period where I was stone broke. Ellie, my girlfriend at the time, now wife, we were living in the tiniest of of bungalows. Literally, in fact, our main bathroom in our house right now was bigger than our whole bungalow. It was ridiculous. I have to pinch myself sometimes. It was nuts. We couldn't even open the door to the bedroom in the bungalow properly. So yeah, and this is me. I've got 2 kids. Well, now a 3-year-old and I guess a 20-month-old, and that's all I really care about these days. So that's what keeps me going. Anyway, typical family sob story out of the way. As I said, I had a 6-month period where it was terrible, and I was literally about 3 months from bankruptcy. I call it my cheese and mayo sort of period of my life, where we struggled to buy cheese or mayo. We were once in Lidl, and my wife was just came up to me in the aisle of cheese in one hand, mayo in the other, and shrugged. We literally couldn't afford both, so we pretty much lived on pasta and rice, just plain rice, for 6 months. It was just shit. So yeah. Anyway, moving on. Whew, God, I'm all sweaty now after reminiscing. But yeah, everything in your life is your fault. It really is. Every bullshit excuse you've ever told yourself is simply an excuse. And I have said all of this to myself, whether it's setting up a new business or getting into trading or learning a new skill. I would always try and self-sabotage myself with other people's negative beliefs that have been projected on me, I guess. So yeah, and the thing is, because I had no money, I was existing instead of living, I didn't want another job, I had bucket loads of debt, no prospects, it's just dreadful. So I literally had to put my foot down, and I needed to sort out my money situation permanently. I was just pissed off with always hand to mouth. So why trading? Why am I beating around the bush? Why is trading such a good thing? Why has it changed my life? Well, the reason I love it so much is because it has no stock. You don't have to hassle your friends or family like lots of MLM network marketing people do. You've got no staff to worry about. It's completely tax-free income. It's a potent skill that not many people possess. And you'll no longer be scared of the world. Like, literally everything you see in the newspapers and the media is all smoke and mirrors, and it's just scaremongering. But when you understand the markets and how things work and how money works and flows, when you follow the money trail, it always leads you to the truth. And so yeah, I'm no longer scared of world politics, etc. It's all just smoke and mirrors. Brexit, Trump, whatever. It really doesn't matter. And yeah, I mean, I've got 70 staff now, 65, 70 staff, and so yeah, that no staff thing is a very good thing. So yeah, and the thing is, for as long as humans are around, there'll always be currencies, there will always be businesses, etc. And what you'll find is that every 8.6 years you'll have another crash. So basically, let's just be pessimistic. Every decade there is always a global crash in some market. Maybe stocks, maybe bonds, maybe commodities, but there is always a global crash somewhere. And people always act like, oh my god, I didn't see this coming. Well, Jesus, just do some freaking self-investment into your mind and you'll realise this happens all the time. So instead of being victims to this, actually learn to profit from this. So yeah. Also, I want to be able to do things in my underwear. I guess I'm pretty lazy, so I spend, 6 days a week, probably 5 days a week, sat in my underwear at home. In fact, I don't even go into my work offices. I probably go there for a couple of hours a month. My team never sees me, and it's great. I just stay at home working, trading, and yeah, you can do that when trading gets good for you. And word of warning: it is not a quick thing. Okay, don't think trading is going to change your life in a year or 2 years or 3 years. It's not. Here's the brutal truth. It's a 5 to 10 year play. So if you are a get rich quick hunter, I would exit out now. Literally stop the video. I cannot help you. And also, here's a really cool thing. It's a great skill to teach your kids. It really is. Your kids are currently liabilities, i.e. they take money out of your pocket every minute, every day. So it's a good way to eventually turn your kids into liabilities. So when my kids are a bit older, instead of giving them pocket money, if they want something, I'll say, okay, go and get me 100 pips on the market on a demo account. And then they'll go out, they'll trade it, and when they hit their targets, I'll give them the money. So yeah, and it's important to know the difference between a life skill and a skill for hire. So cleaning your teeth every day, that is a life skill. You don't pay someone to clean your teeth. But removing a tooth, that is a skill for hire. Just like raising kids, that should be a life skill. But popping one out, that should be a skill for hire. But unfortunately, we put money and investing and trading and all that sort of stuff in the skill for hire category when it damn right needs to be a life skill. Yeah, and it is a life skill that will help you identify potential downturns. You'll be able to profit from these downturns. You will have peace of mind, and that, I cannot stress how underrated that bit is. This is probably, in my opinion, this is the most important thing. So yeah, and the world will no longer be scary. It really won't. So where do you trade? Like where? Well, basically, we trade the global markets. Well, the global currency market is the biggest market on the planet. Put it in perspective, the global stock market is $70 trillion, the global bond market is $100 trillion, but the global currency market is $1.4 quadrillion. It is the biggest market by far. Like, to match the whole year of stock trading, the FX market, the foreign exchange market, i.e. currencies, would match the stock market in about 12 days. It's ridiculous. So where? The UK. The way that I trade is very specific to the UK. It's completely tax-free, and what they've done is, I don't want to go into details here because it's not the right time, but basically they call it financial spread betting. It's nothing to do with like sports spread betting, but it's CFD trading in a tax wrapper. That's all it is, and it's been tax-free since the 70s. Yeah, anywhere you see someone trading on a beach on a laptop is a charlatan. So yeah, anywhere but here. So yeah, no proper trader trades on the beach or by the pool. I tried it. The sand gets in the keyboard. The sun glare. You can't see anything on your laptop because of the sun glare, and there's no freaking Wi-Fi on the beach. So yeah, ignore all of these pretenders. So yeah, we're trading the currencies, and basically the great thing with the way that we trade is that you can trade up or down, so you can go long or short. Whereas buying stocks and shares is so 1990s. You can only make money when things go up, but things are pretty much always going down these days. I mean, it's pretty much every week there's a big company going bust. And so yeah, you can literally profit going up or down. It really does not matter. In fact, a falling market moves 3.3 times faster than a rising market, and a crashing market moves about 10 to 20 times faster than a rising market. So I actually tend to make most of my money going down. So yeah, it's all about pounds per pip. So it's basically like going to your local betting shop and going, hey, there's a market over here which I want to play with. Let's call it pound dollar. And what you can then say is, for every pip it goes up, I want to bet £1, let's say. So when I say a pip is the smallest unit of movement that we care about in trading. So it's basically this one here. So if the market goes from 1.2650 to 1.2655, what this has done is it's gone up 5 pips. Okay? So what you can then say is basically, let's say you want to go up, okay, you want to go long. So you place a trade here, and let's say you go long at £1 per pip, and then things go well, it goes up, etc. And obviously this is not to scale, but let's say the market is now 1.2700. How much money have you made? Well, how many pips has it gone up? So from here to here, the market has gone up 50 pips. And because you've gone long at £1 a pip, you've made £50 tax free profit. It's pretty good, right? And vice versa. Let's say you think it's hit this level of resistance here and you think, oh yeah, it's going to go down now. Well, you can cancel the trade and go, right, I'm now going to short it. So short means you're basically selling, and I'm going to short it at £1 per pip. And let's say you short it at that level there, and then the market does this and you close out here, and let's say at this level here the price is now 1.2550, let's say. Well, how many pips has it gone? So it's gone from 12700 down to 12550. So it's gone down 150 pips. Well, at £1 a pip, you've just made 150 quid profit. Yeah. Or even if you have like not much money in your trading account, and you're going in at 10p a pip, okay, you made £15 profit. So yeah, I would always, by the way, here's a quick bullshit warning, red flag detector. Anyone that's showing you, you know, oh yeah, all you need to do is go in at £10 per pip, and then yeah, you're gonna make thousands of pounds per day. This is complete misleading. Going in at £10 per pip is a very large position, okay? Very large. I typically would be doing £10 a pip with an account of around 200 grand. 200, 300 grand, yeah, is the size of my trading account where I would be going in at £10 per pip. So £1 a pip is a lot more realistic, so I would just be very careful. In our other videos we go into depth why, you know, how it works and why. But also, the cool thing about the way that we trade is that you have a trading seatbelt, which is called a stop loss. So let's say you only wanted to risk £50 on a particular trade. So a lot of people think, oh god, if it goes against you, you're going to lose your shirt. Not the case. Well, so let's say you're going in here £1 a pip, and you only wanted to risk £50. Well, what you could do is set up a stop loss 50 pips away. Okay. You wouldn't set up the trade like this, but I'm just showing you for illustration purposes. So all you've done is you've set up a stop loss here, and worst case scenario is if the market just goes against you and hits your stop loss, it boots you out of the trade and all you've lost is 50 pips, i.e. £50. But if that doesn't happen, let's get can I get an eraser? Yes I can. Ah, handy. Good old PowerPoint. However, if the market, let's see if we can get a different colour. But you can use it in an almost an offensive way, because if the market goes up in your favour, you can actually click, hold and drag the stop loss up, and you can basically trail the market as it goes up. So let's say your stop loss is now here, you've effectively locked in profit, and as the market goes up, you keep on trailing this up, and so let's say your stop loss is now here, and then eventually the market will roll over, it'll hit your stop loss, you get booted out, but you've just made all the profit from here all the way to here. So let's say that's, I don't know, 100 pips, great, you've locked in profit. So again, quick broad brush overview of how you trade, and you can do this going up or down. It's beautiful. So yeah, really quickly, I want to quickly breeze through risk management, why you shouldn't focus on your win rate, and the 5 M's of realistic trading, etc. So basically, it's all about risk versus reward, and you need to look at everything in terms of R multiples. So very quickly, if you risk £100 and you end up making £100 profit, i.e. you get your 100 quid back and you make 100 quid profit, that is what's called a 1R outcome. Okay, so if you risk £100 and you make £200, guess what? That's a 2R outcome. And if you risk £100 and you lose £100, guess what? That's what's called a 1R outcome. So this is how you look at risk in terms of trading. In fact, I look at everything in my life. I look at R multiples in business, life, everything. And let's say you place 20 odd trades, okay? And it looks a bit like this. So as you can see here, over 30 odd trades, you've got a pretty poor hit rate here, so you're losing most of the time. But look, this is why your hit rate doesn't matter, because your winners are far bigger than your losers. So in this case, if you were to add up all of these losers, you would have lost 22R, but your winners add up to 31R. So what this means is that you've made 9R profit. And let's say you're doing, I don't know, 10 trades a month. So over 3 months, you've made 9R. So what this means is, yeah, so one way you can look at this is if you're risking a certain amount per trade. So let's say you're risking, I don't know, 0.5% of your total account per trade, or 0.5% times 9 equals 4.5% over 3 months, which isn't bad. Or in another way, I don't like looking at it this way. What you could look at it is go, right, if your 1R is, I don't know, 100 quid, what this means is if you've got 9R over 3 months, 9R times 100 quid means you've made 900 quid over 3 months. So there's different ways you can look at it, but yeah, that's why R multiples are quite handy. So yeah, here we've got a 23.3% win rate, yet you're still making profit, and this is why your hit rate means nothing. So yeah, as I said, if you're risking £1,000 per trade all the way down here, then whoopsie, down £1,000 per trade. Sorry, there should be a 0 there. 9R, yeah, you'd be making 9 grand. So that's R multiples. But you're probably thinking, can you actually make 300, 500, or even 1,000% profit on a trade? Because effectively, that's what it is. If you're making, let's say, like over here, look at trade 30. Here, trade 30 has made 10R. So what this effectively means is that you've made 1,000% on that ROI on that one trade, not the whole account, because as you can see, you've only made 9R. And you're probably thinking, well, that doesn't make sense. Like, can you actually do that on a trade? And also, how much should you risk on a trade? Well, let's have a look at this. So for my students in our private community, one of the things we do is that we've got a Telegram group. So every trade I place in real time, I text out in real time, and I also I do a screen capture. So like I'm doing now, I basically video what I'm doing, and then they get the trade. So here's an example. Got a couple of trades here, and if we have a look, this is it. So this trade, as you can see here, if you look up here, is pound Swissy, pound against the Swiss franc, and these two. So it's these two trades here. So I entered the market at where these yet green arrows are. So here and here, as you can see, I was shorting it. I had a 30 pip stop on that one and a 75 pip stop on this one, and the market's gone down. And as you can see, this one is currently, yeah, so this trade you can see is 404 pips in profit, but look at the stop loss. I had a 30 pip stop loss. So this is a 5.939R trade. This is 12.07 R. It's, yeah, so this is more than that 10R trade that you saw on the previous slide. So it does happen. In fact, probably once a month you'll get a nice 10R 5 or 10R trade. So yeah. And how much should you risk per trade? So here's the thing. Anyone that says, oh yeah, you need to risk 1% per trade or 5% per trade, I'm promising you now, they are losing money, or they're just a marketer. We never really risk more than 0.25% of your total account per trade. So what this means is, if you have £1,000 in your account, well, the way I worked that out is you divide it by 100, So that's your 10%. So that's, sorry, divided by 100 gives you what 1% is. So 1% is that, and then I just divide that by 4. So yeah, £2.50. So if you had a £1,000 account, you're only risking £2.50 per trade. And this is why trading really isn't risky, especially when you have maths on your side. So yeah, as I just said. So by the way, 0.5% per trade is when you know what to do. When you first start, I would highly recommend doing 0.25%. But when you get good, then yeah, eke it up to 0.5% if the maths is on your side. So now I want to quickly talk about the 5 M's of realistic trading, and this is I guess a framework of how I apply to any market. So if you're looking at a brand new market, I look at the 5 M's, and then all of a sudden you'll understand how to look at that market properly. So the first one is mechanics. So what is money? How does it flow? How does the world work, etc. So that way you get a big macro fundamental picture of the whole world or that particular market. So then markets, you need to learn the 6 market conditions, which market to trade and which strategy to use per market. So a lot of people end up trying to apply one strategy across every freaking market condition, and that's just a recipe to lose money. Then the method, so you need to know how to execute the trades, the risk management, the process, trade analytics, your rules, and putting maths on your side. There's a lot to do here. So yeah, the method is normally a very big topic when you're learning to trade. Then the mindset, so yeah, trade and money psychology is everything. Yeah, and you need to avoid self-sabotaging traits with your trading, and everyone does it. Men are actually the worst at trading. Women are far better. They have less ego and testosterone when it comes to trading. And then the meltdowns. How to rinse the market during crashes. That is, yeah, it's game time, and we're very, very close to a global crash, a lot worse than 2008. So they're the 5 M's of realistic trading. Hopefully that makes sense. And moving on, I just want to talk about realistic expectations. So there's been a big tidal shift in trading, especially with the realistic trader in my community. So first of all, I'll talk about the typical journey. This is what you can expect to do whether you join my community or anyone else's, really. So the first year is basically a year of learning, and you can't expect to do a video course and expect to become a dentist or a doctor, etc. And trading is exactly the same. So it will take a good year to become proficient. And then I guess year 2 is where you're starting. I mean, here is like you've just got your learner plates. The first year of driving after your driving test when you're 17, etc. That's where you do the best learning. And then I guess from year 3, 4 and 5 is where you're really growing, depending on how big your account is. But typically, if you're going to manually trade, then you're not going to make any money really in year 1. So let's say 0 to, I would say probably, let's scratch that, probably minus 10% to hell, maybe plus 5%, depending how well you do. Year 2, I mean, by the end of year 2, I mean, you would have done a lot better. So you're probably looking anywhere from minus 5% to maybe 10-15%, let's just say 10%. And then year 3, 4, 5, it depends how good a learner are and you're logging properly. Yeah, then you can probably be looking, between 0 to 20% per year. So that's that. However, I am now going to discard all of these things. Discard, how can we discard all? Erase all link, there we go. Because things have changed. When you're manually trading, you are basically, let's get the pen out again. So when you're manually trading, I'll just put it up here. What happens is you miss setups. So you miss trades because you're either not at the screens, you're asleep, you're yeah, you're just not at the screens. You're sleeping, you're working, you're eating, you're whatever it is. You're not looking at the charts, etc. Also, when you're manually trading, you are emotional. No matter who you are, humans are just emotional. Whether when you're losing a trade, you're winning a trade, there are emotions there, which is not good. And what that means is that there's less discipline. So people then react to their emotion. Discipline. So that's that. Also, risk management. You have to be really, I mean, if you have less discipline, you then have less risk management. It just goes out of the window sometimes. So you have to become like a robot. I mean, if you can do that manually, that's great, but it takes years to become like a cold, calculated trading, I guess, robot, so to speak. And because of, I guess the main thing is if you, I mean, one, yeah, you also need a positive expectancy system. But really, if you come back to this missing the trades bit, because you're asleep so much, depending on what your system is, like if I was to manually trade, I'd probably place maybe, I don't know, 100 trades a year, let's say. But if there was a way that you could trade so that you aren't missing any setups, I mean, you could easily 10x that. And so even if you're making a tiny bit of R per trade, you know, the same R, if you can just get more setups, then that'll equal more profit. So again, let's just discard all of the things, because in fact, what I'm basically leading to, the real thing which has been the tidal shift in trading, is that most of our community are now we're not manually trading. We're I guess no longer manual, so we're no longer screen slaves or slaves to our charts. We're basically now bot tinkerers. So basically, we have a state-of-the-art, very expensive. It's been taking a very long time to develop, but we have a state-of-the-art machine learning trading bot, and that basically gets rid of all of this. So all of this rubbish here, the missing trades, emotional, less discipline, bad risk management, etc. That's no longer a thing. We have a machine learning bot, which is just freaking insane. So I'll share that with you in a second, but basically I guess if you are any of these, I would highly recommend not to trade. So if you're financially unstable, this is not for you. If you're looking for quick cash flow, again, I mean, with the bot, it is a game changer, but I really wouldn't do this for cash flow. I'd do this to grow an account, as in a trading account. If you're not prepared to dedicate the time, again, this isn't for you. Although the bot will be earning for you 5.5, so 24 hours a day, 5.5 days a week, you still need to put in the effort and learn. And again, there's the obvious money requirement. So you should have at least, I would say, £10,000 to put into this trading project. Now obviously some of that money is going to go into training, so as in investing in your own mind and knowledge, and a portion of that is going to go into your trading account, or with us, your robot account, so to speak. So hopefully that makes sense. What I really don't want to see people do is go big on their credit card, just to, yeah, it's just a downward spiral at the moment. You start borrowing money, yeah, it's not good. So they're the three things which I said that you would learn. Hopefully that's all made sense. I mean, I guess you basically have two options now. You can either do nothing. If trading isn't for you, that's great. If trading isn't for you, then perhaps look at business. The WAP.org is a great place to learn how to set up, run and grow a business from scratch. Or if trading is for you and you want to find out a bit more about the realistic trader, then yeah, I guess just continue listening for the next, I guess, 5-10 minutes or so. I'm just going to show you all about the realistic trader community. So in a nutshell, in fact, if we just exit out of this, and I will basically show you the online elements of it all. So let's look at the Facebook group. So first of all, if I log in, RT community, here we go. So this is our Facebook group. So yeah, we're a small community. It's only about 200 of us, 264 to be precise. And this is it. This is our private group. So everyone is talking about trading, asking questions. Yeah, it's great. If you have any questions at all, pop them in here. The community will answer them, and also the mentors and myself. So we're constantly sharing stuff there. So yeah, that's the Facebook group. And then on the Telegram group, if we just so we have a Telegram group where I send out any important announcements, etc., or if there are any really important trades, stuff like that. That's pretty good. And then also here's our trading log. So this is, I think, a first for any type of community like this, but we have a fully transparent trading log. So so obviously this is my personal log. You can see all sorts of different things, but yeah, it gives you all sorts of stats, which is really quite good. And then the amazing thing here is that we can have access to everyone else's trading log. So you can see who's got the most pips in the last 30 odd days, how much actual money has been made in the last 30 days, the best strategies, etc., the best loggers, etc. So for example, if we wanted to have a look at, say, Sally, okay, so we can have a look at Sally's log, see what trades she's made, see what account, yeah, she's basically, the market's been crashing recently, and so we've all basically made a fair chunk of profit due to that. But yeah, so, and you can even see what trade she's done. So for example, let's say I don't know, ones which have been completed. Let's say this one. So in this one only made, yeah, small loss, but it shows you the actual chart of where she got in, got out, etc., etc. So that's our trading log. And then, in fact, I'll come back to the bot. But yeah, this is our 12-month training program, so it's CPD accredited, etc. But yeah, these are all, I guess, all the videos that you need to go through. I mean, you can binge watch them like a new Netflix if you wish. So yeah, for example, if you click on that, sometimes there's a bit of text, etc. But most of them there's a video. Let's just skip forward. Okay, so here we are in the office, and this is Pips, in case you haven't already seen it. So yeah, that's Pips, my lovely dog. Can't be a trader without a dog called Pips. So that's that. And then finally we have the bot. So this bot is rather impressive. So it's taken a long time, but basically it stops us from being a screenslaver, as I mentioned. So we've been demo trading it and testing it for months, and then not long ago I opened up a live 15 grand account, and basically shared with the community, hey, 15 grand account, let's connect with bot, etc. And it's been rather amazing. So the thing is, I've just topped up the account. So for example, if we go, so you can see it's connected to the live account, we can actually log in. I'll show you. So you go into myfxcm.co.uk. This is just a way to access the log, and then you can go to reports. So generated report, so since open up till now, generate report. And so this is the report. So if we scroll to the bottom, you can see I put in 15 grand, what was it, 10th of February, and the 13th of Feb we placed the first trade. So if we skip forward a month, so to the 13th of March, 13th of March, I'd call it the 12th, here we go. The account was up by £1,871, so divided by 15k, yeah, it was up 12.4%. And then since then, yeah, it's been just around the same. So I've just put in a little bit of extra money, but as you can see, that is the account. And when you go to the dashboard, you can see what we're up at the moment, 12.61%. And you can have several bots. I've got full autopilot on, so Typically, there's non-autopilot and full autopilot. If it's for example off, and this is basically semi-autopilot. So when it's off, basically what happens is the bot will send you text. So this is where you can still be involved in the process, where, for example, let's just pick a random one. So, hey Simon, found a trendy jibe, blah blah blah, do you want to take it? You click it and it shows you the screenshot of where it is. Give it a second. Here we go. So in this case, if we zoom in a bit, it's showing us that that's where the stop loss would be. This is the take profit. We entered here. Normally there's a buy and a yes and a no. So if you press yes on your phone, it then places a trade for you. In this case, you can see I press yes, and then the trade hit profit. So that's that. So that's if you wanted to basically be involved. I've personally just got my bot on autopilot, where it's just taking the trade for me. Again, you can also play around with the settings. So for example, you can see I've got all the majors and minors, all the different time frames, etc. Let's put it on. I've got a quite aggressive setting, but you can just put it on a pretty soft setting. So say risk multiplier of 3. You can again edit all sorts of different things, and you can do a little test. So this is going to take a little moment. So here we go. Yeah, so obviously that's a balance over time, and then you can see the monthly performance. So yeah, this is a pretty conservative setting. So this is why I cringe when I say, it makes 5 to 10% per month on average on a conservative setting, because it does. So what this is basically showing is the return that the bot made if you set it from January 2011 and left it until now. It's basically, these are returns. So even the worst month it did was minus 9.5%, 9.6%. So yeah, and down here I would ignore this bit here, because this is basically showing you what would happen if you just did nothing and just let it accumulate and compound interest, etc. But this is the annualized return. This is the bit which is the important thing. So yeah, you're doubling your money basically every year with this particular setting, and the drawdown is really impressive. So that means peak to trough. So the worst, the market went against you from peak to trough. So if you look at this, it doesn't matter how much money. So I guess from peak to trough, it was only 18%. So 59% hit rate, etc. And you can even check, you can like foolproof it, so it shows you every single trade it placed. So if we, click a random page, wow, that's a nice winning streak, and click on any of these, and it says loading, there we go, and it'll show you that here you entered there and it took profit here. So that was a profitable trade there, and you can actually see the setup. So yeah, that is the bot. Yeah, so just to round it all off, basically, long story short, there's no silly marketing or anything like that. This is everything that the community gets you, and it's either £500 a month, and it's a 1-year contract, or one-off £4,800. So you basically get 10 months, so 12 months for the price of 10. Yeah, we don't have any discounts or time limited offers or anything. That is just the price, and I think the bot itself is worth millions, and so yeah, I think it's an absolute bargain that you get full access to it for basically $4,800 a year, seeing as the returns it's making in the community. So yeah, so I guess in a nutshell, all you need to do is when you join, or if you become a member, you simply set up the bot. You have a live Zoom session with one of my team members, and they walk through the setup with you, and they do it for you because it's a bit tricky. Then you can say hi on the Facebook group, then do all the videos and get stuck in, and then yeah, come to the cuddles. So yeah, hope that makes sense. If you do want to jump on board, all you need to do is just go to therealistictrader.com, go to the RT community, and then just scroll down, and then go to the RT community. Being in Norfolk, the internet hasn't really reached us properly yet, and yeah, just scroll to the bottom, as you can see, and then see what's best for you. Oh, I forgot to mention that. Yeah, I believe it'll make you more than 20% per year. I'm pretty sure of that. But what we'll do is that we've got a little refund that if you don't make at least 20% in 12 months with the bot running, then we'll just give you your money back. So nice and simple. And yeah, hope that makes sense. And I'll see you all soon. Toodles. Bye bye.